What's up, guys? It is Sam, and today is July 16th, and I wanted to talk about my portfolio from yesterday and what took place. But before I get into any of that, if this is your first time here, what's up? I'm Sam. If you're returning, it's good to fucking see you. With that being said, I use options, as you probably saw by the title of this video, a lot in my portfolio, and as soon as I found out about options, I'm not sure what it was, but I was immediately drawn to that. Think about the last time you learned about something or heard about something, and you were so intrigued by whatever it was and curious that you started to do your own Googling and going on YouTube and reading just articles and whatever the case is. And then you even go through and take classes in grad school or other designations to learn about this kind of stuff. And that's how obsessed I was with this and learning more about this through grad school, through the CFA program. You learn about it in the CMT and the CAIA. All of this stuff, because I found them so incredibly intriguing. I believe that you can draw like an XY axis where you have complexity increasing and you have the number of people involved on the horizontal axis. So the vertical axis is complexity. The horizontal axis is the number of people involved. So as complexity increases, the number of people decreases. So you'll get a graph like this. And the more complex things are, the more opportunity there is for the person who knows all of those little intricate details and anomalies that somebody else might not notice. Like, think about whatever business you're in and think about the top person in your industry or in your company. They just are better. It's just what it is. So not saying that even slightly about options whatsoever, like not even close. But that was my idea, is to try to learn as much as I possibly could learn. All right. And my objective, so I want to have a clear, defined objective of what I'm trying to do every week, because I mainly trade weekly options primarily. I do a couple of other options in terms of time frames, but primarily it's weekly. And the objective is to make about $250 to $300 every week in profit. I use Robinhood as my trading platform, and Robinhood's completely free. There's no costs involved with that explicitly. So I love that. I've used a bunch of different brokerage platforms over the years. I love that. So yesterday, my portfolio value finished, and I'll show you this. My portfolio value finished $6,800, $39.78. I was up $307.62 for the day. I had two positions. So in terms of options, I had two positions that were already open, and they were to take advantage of Tesla's earning call that is going to be coming up in about 10 days on the 24th of July. So I put those two things in place, and they're already profitable at this point. One of them I might even close early if the price continues to go the way it's going, and I can collect 90 something percent or all of it. The profit, I will probably take that one off the table. And the other one I put in place several months ago. That one it's already profitable now, so I can take it off the table, but more than likely I'll just leave it in place. Tesla's currently trading at $249.50. And so the objective, right, is the $250 to $300 a month. What do I do with that profit? Well, I take approximately around one share's value of Tesla off the table per week. How do I do that? Well, if I make $250 in profit and Tesla selling for $250, I take $250 and I purchase a share of Tesla stock. And I'll do that for 6 weeks or so. And then on the 7th week, I will do the same thing, but I will purchase something other than Tesla. So this is week number 7. I have 6 shares of Tesla stock, and I have week number 7 going in to keep the portfolio diversifying. So I want to continue to diversify the portfolio as it continues to grow. $6,800 is not a ton of money, but the total contributions that I have put in are $4,587. So I want to continue to grow the portfolio and continue to diversify. You can get the maximum benefit from diversification, holding the least amount of securities by holding approximately 30 securities. That's what the research shows. And you can do that through, first of all, you want to find the security that you want to hold, that you believe in. And second, and for most people watching this would probably just be like an index fund or something, but the security, and then the next is the correlation of that security with the portfolio. Because if your portfolio if you have 2 identical securities that you would be happy with A or B, right? You're fine with holding Pepsi or Coke because you like both companies equally, but Pepsi has a correlation with your portfolio of 0.6 and Coke has a correlation with your portfolio of 0.8, holding everything else constant. That's called a ceteris paribus. And you wanted to be optimal in that situation, you would do Pepsi because Pepsi has a lower correlation with your portfolio than Coke does, which has a greater benefit from a diversification standpoint, adding securities to your portfolio with a lower correlation to the portfolio. Hopefully that's not too much math for you guys, but that's portfolio theory. You can Google that shit and read about it. Now, what are the 2 positions that I opened? Being that this is week number 7, I did not buy a share of Tesla stock this week. I took $230 and I purchased 22 shares of Ford. Why would I purchase Ford? It doesn't seem like they know what the fuck they're doing, right? Well, their dividend yield is 7.84%. Like, that's insane. That's a crazy dividend yield. And I think I would like to hope that Tesla or Ford could potentially get some of their shit together. If you look at Ford, they're valued at 44 billion dollars, about the same as Tesla. And they have a dividend yield of 7.84%. So in 13 years, I get my money back that I invested just through dividends. Like, that's pretty insane. And one of the things that happens with dividend stocks is that management tends to like increasing the dividend over time. So more than likely, because of my cost basis is what I purchased, $230, the dividend will more than likely, assuming that Ford can slightly get their shit together and turn it around, which, a company of that size, whether they have to restructure or something, but they get a lot of cash flow coming in. So if they can do something intelligent with that, VW invested $2.6 billion into Argo, which is Ford invested in they're a majority shareholder of that company, and they do autonomous driving, and their value is about $7 billion. So I don't know the specifics of how much Ford owns, whether it's just a majority and 51%, or maybe it's 68% or something like that. And so VW is going to be purchasing 500 million shares from Ford. They invested $1 billion in cash into the company, and they're donating their autonomous driving unit in Europe to the collective, right? So that is why I think that there's some potential there. I think that Ford really needs to get some of their shit together, but that is why I invested in them. I've been following along for a little while now, and hopefully they can get some of their shit together and start making some intelligent moves. I think from a manufacturing standpoint, GM is beating them. From a product development standpoint, I think GM is beating them, but I also believe that there's not in a set direction at this moment in time, and I think that is the risk, but it's also the opportunity, because as soon as there's a definitive leader in there that can pick the direction of the company intelligently, there could be tremendous value created relatively quickly. Because if you think about it, if Argos is $7 billion and they just own 50% of that, that's $3.5 billion that I don't think is really even factored into Ford's market capitalization very much, because market cap of Ford is like $43 billion. So anyways, that was the first position to open, 22 shares of that. The second position was Netflix. That was a put credit spread. There's two contracts and $45 each. So a total max profit potential of $90. The expiration is this coming Friday, so July 19th. They are the 325 to 320, and that is, I opened it yesterday afternoon, and it's making $2 right now if I were to close it out when the market opens this morning. Netflix is currently trading at 369, so there's a lot of margin in there between today, the 16th, and the 19th. $3 for like Netflix to move. Yesterday, Netflix had a sell-off first thing in the morning. When there is a sell-off without any substantial news, the sentiment in the market shifts to the bottom half of the market, and the premium on options increases drastically, so that I can get one of two things, or some combination of both. First, I can get a much larger premium for holding the same amount of risk, or I can hold less risk and get the same amount of premium I would have gotten had the market not shifted the sentiment. Or third, I could do some combination of both and sit in the middle, where I hold a little bit less risk, but I also get more premium than I would have if the market had not shifted that sentiment. So that happened, and that allowed me to sit way below where the what I say, it was 325, and it's at 370 right now. So there's a $45 price movement that would have to happen with Netflix between now and Friday. So you just consider what's the probability of something of that nature happening. Something pretty substantial would have to happen. Not inconceivable that that could happen, but probability of it happening is much lower. I'm willing to take that risk for that $90 because you can a lot of times close out the positions even before you'd have a max loss on something like that. Anyways, if you guys have any questions about that, what do you think about this beard? I think I fucking need to get rid of this beard. If you guys have any questions, let me know down below in the comments. Don't forget to subscribe. I will keep you guys posted on this track as I move forward. I think I'm going to take maybe 1,000 or a couple thousand and put it into Lending Club and start to do some investing over there too, and see what types of yields I can get. So if you want to hear about that, let me know down below in the comments. Reach out to me on Instagram. There's a link in the description. If you don't know what Lending Club is, maybe you should Google that shit. Pretty interesting peer-to-peer lending, and also they do their own credit scoring, which is kind of interesting because it's different than FICO. So they're taking they're doing things in a very interesting way, and I think there's some very nice potential over there that is not being realized, which allows you to garnish some extra returns. So if you want to see stuff on that or whatever, follow this by pressing that subscribe button and press that bell notification. YouTube will notify you every time I post a new video. Peace.